Okay, we are live. So let's see here, just to make sure with Facebook. Yep, we're live. Okay, so pozdrav i dobrodošli na treći webinar Kro dijaspore i coka. Danas imamo jako zanimljivu i traženu temu i nažalost članovi Hrvatske odvjetničke komore, ovo je zbog prošlog puta, ne mogu dati porezne savjete svojim klijentima, kamoli javno na društvenim mrežama. Stoga ovo je razlog zašto smo pozvali svoje partnere u PwC Hrvatska da ogovaraju na vaše porezna pitanja. Želim se prije svega zahvaliti našim gostima Johnu Gašparcu, predsjedniku uprave PwC Hrvatska, i Hrvoju Jeliću, partneru regulatorne usluge PwC Hrvatske, koji su izdvojili svoje vrijeme i pripremili se za vaše pitanje i za današnji webinar. Današnja tema utječe na mnoge Hrvate u hrvatskom iseljeništvu, pogotovo na one koji žive u zemljama koje nemaju službeni ugovor o izbjegavanju dvostrukog oporezivanja. Mnogi Hrvati su nesigurni o dvostrukom oporezivanju jer ne znaju što dvostruko oporezivanje zapravo znači i potencijalno može predstavljati problem ako žele ulagati u Hrvatsku ili na posljedku vratiti se u svoju domovinu. Dao bi primjer sebe. Imam 3 državljanstvo, imam američko, kanadsko i narodno ponosno hrvatsko državljanstvo i često sam se pitao koji su moje porezne obaveze u Hrvatskoj, Kanadi i Americi, s obzirom da sam državljanin sve 3 države. Uvjeren sam da će vas Hrvoje i John jako dobro informirati o poreznom sustavu u Hrvatskoj. Želim se također zahvaliti svima vama, našim pratiteljima, podupirateljima i prijateljima koji su nas prate. Kro dijaspora vjeruje da ovo vrijeme ne smije biti predviđeno za osobni interes, već za doprinos našem društvu. Razlog tome jest i činjenica što podupiramo ECAP Zagreb i tražimo pomoć onima kojima je najpotrebnije. Stoga, ako ste u financijskoj mogućnosti doprinijeti, svakako topo preporučamo da donirate ECAP fondu za obnovu zagrebačkih bolnica. ECAP je već prikupio oko $160,000 američkih i kupljen je veliki broj medicinske opreme, inkubatori, ventilatore za potrebe pacijenata i doktora Zagreba. Poveznica za crowdfunding nalazit će se u komentarima ispod ovog webinara. Ovi webinari previđeni su za vas, stoga još jednom ponavljamo, stvarno ako ste u mogućnosti, učinite nešto za naše najpotrebnije u našoj domovini. Hvala vam na podršci. Sada na engleskom. Greetings and welcome everybody to the third Kro Diaspora and SOC webinar. Today we have a very interesting and sought after topic. Unfortunately, I kind of mentioned this at the very beginning, is that because lawyers are not allowed to give actual tax advice in Croatia, like there's actual tax advisors in Croatia to their clients, let alone give it alone on publicly on social media. This is why that we have invited our partners at PwC Croatia to answer your tax questions. I want to begin by thanking our guests, John Gašparac and Hrvoje Jelić, who are both partners at PwC, who have taken the time and prepared for your questions. Today's theme affects many Croatians in the diaspora, especially those in countries that do not have a double tax treaty with Croatia. Many Croatians are unsure about double taxation and what it actually means for their investments in Croatia, and ultimately, if they want to return to their homeland. One example is myself. As I said before, I'm an American, Canadian, and Croatian citizen, very proud Croatian citizen. And I've asked myself when I was actually getting my American citizenship, whether or not what are my tax obligations to the United States? I'm sure that Hrvoje and John will inform you, as well as me, about the tax system in Croatia. I would also like to thank all of you, our followers and supporters and friends who follow us. Many of you have asked about how you can support Kro Diaspora. We believe that this isn't a time to ask for donations for Kro Diaspora, but we would rather encourage you to donate to the ACAP Earthquake Relief Fund. ACAP has already gathered $160,000 and has bought much needed medical equipment such as ventilators and incubators for Croatian hospitals. So if you're in any shape or form able to give money and really like what we're doing here at Cro Diaspora, then we ask you to donate to this really worthy cause. We thank you for your support, and now we go to our topic of the day. So I would like to kind of start off the conversation talking about what are the basics of the Croatian tax system. And I think it's good to understand what is the structure in which the Croatian government collects taxes in Croatia. And I asked this of Hrvoje because he's our tax expert. Could you give us an introduction to the Croatian tax system and how it functions for citizens as well as businesses?
Sure. Thank you very much for inviting us. We're happy to be here tonight or today with you. Depends on who is where, both John and myself. And just a small disclaimer, we will not be providing any particular tax advice today. We will be commenting or discussing different tax topics on a rather general level, I would say. John, would you like to add something prior to me explaining the tax system?
Sure. First of all, Mata, thank you again as well from my side. I was on about a month ago and then really enjoyed this, so glad to be back. I will emphasize, first of all, Hrvoje is a tax expert here, but we do have some very common themes and common knowledge, and we've seen a lot of questions come across our desk, even through Cro Diaspora, but we get them regularly also from Diaspora directly to our offices. And all I would say to anybody right now is, before Hrvoje starts talking generally about the tax system, is that whatever we say, there could always be additional circumstances that each individual has when it comes to taxes, and it's very important to understand this, so that there might be a topic we're talking about and might relate directly to some of the questions you're asking, but I would qualify all of that by saying, unless your tax advisor knows everything about your finances and your income, the question being answered is subject to knowing that and seeing whether there's something else that could potentially impact, whether some laws within the tax system, interact with each other and may cause a different answer or a different outcome. Right? So that's it from my side for now. Go ahead, Andrew.
Okay, thank you. So as introduction, just a few words on the Croatian tax system. I have been in this business in tax advising on Croatian taxes for 20 plus years now. And today I can say that the Croatian tax system is a fairly good one, quite developed. It has been developing over all these years, and it gets certain amendments on an annual basis in the last 4 years at least. Usually these amendments are implemented as of 1st of January of a particular year. This is in order to avoid changes of the tax system within a calendar year, because for the majority of Croatian taxpayers, either individuals or corporate taxpayers, the calendar year is the financial or the tax year at the same time. Not always, but in the majority of cases. The main tax in Croatia is the value-added tax. If you take a look at the state budget, then you will see that approximately 50% of the total state budget in Croatia is collected from so-called indirect tax, which is in the first place value-added tax and also excise duties. So the value-added tax amounts to roughly 50 billion kuna per annum, and the excise duties to around 15 million kuna. The corporate income tax brings roughly 8.5 billion kuna, and the personal income tax, which is now not the revenue of the central state budget, but of budgets of local authorities, is according to the information that I got, around 15 billion kuna per annum. There are also some other types of tax, but we always call these three tax types the main tax types. So this is the value-added tax, the corporate income tax, and the personal income tax. And the tax authorities in Croatia are quite diligent, if I may put it this way, in collecting taxes. The tax discipline is fairly high. And later on, we will be touching certain specific tax questions. But I can say that based on certain data received from the European Union, Croatia is amongst the best performing states within the European Union in terms of collection of the VAT, reporting and collection, better to say. Mate, any questions on that?
No, I think that pretty much covers everything, except maybe could you go a little bit more into detail about what are the specific tax structures? So let's say if you have a job or if you're a business owner, maybe what are some of the taxes that you need to pay?
Mm-hmm. Sure. In Croatia, all companies are per definition corporate income taxpayers, all of them. You do not necessarily need to be a VAT payer as a corporation. It depends on the threshold of your supplies. And individuals have also different types of income, and they're taxed depending on the type of income they're receiving. I may say that the majority within the personal income tax would be employment tax and pensions. Then also self-employment, because there are people who are sole entrepreneurs. They might even choose to pay corporate instead of personal income tax, which is interesting. There is a lot of capital tax, which is applied to dividends, for example, or capital gains and interest as well. And there is also a group called other income in Croatia, which is basically anything which is not in those first categories of income. And also, I didn't mention income from property or proprietary rights. Okay, so these are the five basic types of income which are generally subject to tax. There are, of course, some specifics which we might touch a bit later. So, as I said, every corporate entity, which means every company in Croatia, is a corporate income taxpayer. But how much tax they pay is determined, of course, on income that they earn, but also on the revenue, which is a bit maybe strange for some people, because we basically apply two tax rates, 12% or 18% corporate income tax. But the lower tax rate is applied on income derived from revenue of less than 7.5 million kuna, which is around 1 million euros. So usually you do not link a tax bracket or a tax rate to revenue, but to income. However, in Croatia, it's a bit, it's a kind of a hybrid. So your tax rate depends on your revenue, but not revenue is taxed, but income, profit. Okay. I don't know if I was clear enough on this one.
I think it makes sense, Hrvoje. And just a point to make it clear, I mean, the 7.5 million kunas, if you're in that bracket, you're paying 12% tax. But once you get above that, you're paying 18% on everything, right?
Yes, yes. This is a specific, because it's not the tax bracket like it's the case in personal income tax. So in personal income tax, if you earn up to 360,000 kuna per annum, you pay tax at 24% plus surtax, if any, depending on your place of residence. And on anything above that, but only on the surplus, you would be paying 36%. Okay, so it's not that you earn 370,000 and then you pay 36% on everything. Okay, these are real tax brackets. Whereas with the corporate income tax, it's a bit different.
And then also there's other, like, let's say a personal income, you also need to pay contributions, right? Like for the pension plan and so on, right?
Correct. This is related to individuals. But in Croatia, unlike the US, for example, when you have a payer of income, which is, for example, your employer, then the employer and not the employee is obliged to calculate and report, withhold, and pay tax on your behalf.
Exactly.
Which makes the system quite straightforward, and I would say in that sense rather simple and user-friendly for individuals who are the taxpayers, because you have a taxpayer, this is the individual, but you have a person who has to take care of the individual's taxes, and this is the employer. However, if you're employed with a company which is abroad and you receive income from abroad, then you do not have a domestic payer of income, and then this liability of calculating and paying tax passes over to you. So this is the case also with dividends, for example. If you receive a dividend from your Croatian payer, then the Croatian payer will be obliged to calculate and withhold tax and pay you the net, and also report to the tax authorities. But if you have the same thing from abroad, then you need to do it by yourself.
Yeah.
Okay? So these are the differences.
That's a really good difference to point out, Hrvoje, and Mate, you'll understand what I'm talking about when I say this. Growing up in Canada, you know, Canadians, Americans, probably Australians will understand this, that we grew up thinking, you know, we take care of our own taxes, so there's taxes remitted at source, but in the end, you've got to fill out your tax return, you've got to do all these things. And we always think of gross in terms of how much you're making. Oh, I'm making X amount, and it's always a gross figure. Whereas in Croatia, which it took me a while to get used to, everybody's talking about netto. It's all netto. They're just about, this is what I see in my pocket. It's after taxes. I don't have to pay anything else after this, right? Like that's it. Once, you know, unless you have some other incidental income apart from your employment income, you don't have to worry about filing a tax return, about anything. You're done, you know?
And that's what a lot of people have been asking me, right? Is that when they talk about the Croatian tax system, they were always asking, do I need to like file income taxes or something like that? And I go like, well, you know, April 15th is not really a concept in Croatia. Maybe for some people you need to, like, if you're paying, you know what I mean, the tax, if you're withholding the tax, and then, but if you're receiving the money, you're not the one that's concerned about paying the taxes. It's the person that is withholding it.
Exactly. I lived here for many years. I've never actually officially filed a tax return because I haven't had to, because I believe the tax law actually says, unless you have an additional source of income of some sort that you would be declaring, you have no obligation to file a tax return personally.
Yes, I will explain this right away. I would just like to go back to Mate's question about contributions. Mate is
Sorry
right.
about that.
Yes, it's not only tax. It's also personal. It's also contributions for Social Security. So we have two nowadays. It was more complex in the past, but now we have health contribution, which is normally the burden of the employer. So it comes on top of your gross salary. And we have pension contributions, which amounts to 20%. Might be divided into 5% and 15%, depending on how you contribute to, whether you also contribute to your private pension fund, which is basically also compulsory, even though it's private. And most of us pay to both the public and the private. Only people who were born, I cannot tell you now in what exact year, they are entitled to contribute only to the public and pay 20%, not 15 plus 5. Okay, now the filing. The filing is very much unlike the one in the US, for example, or in Canada. And this is because the Croatian tax authorities wanted to, in a way, simplify the system. Because many years ago, it was the rule that every person who earned any kind of income was obliged to file an annual tax return. And the deadline was the end of February of the year for the previous year. However, then the tax authorities realized that many people were filing their annual tax returns, and basically there was no tax to be paid in addition, and there was no tax to be refunded to them. So people were basically paying throughout the year exactly the amount of tax that they were obliged to pay on an annual basis. And then they said, okay, let us simplify this. And then we came to what John has just mentioned. You had to file an annual tax return if you had two types of income, and even some of the second types of income were also excluded. And now we have, I would say, the simplest possible system, where there are different filings on a transaction basis. So you receive dividend, then somebody reports, either you're a payer of dividend or you, depending on what I said earlier. And this way, the tax authorities in real time, or within a delay of either 8 months or 30 days maximum, they get all the information about your income. And then they calculate the income for all of us once per annum after the year has expired. And then they see whether we have something to pay in addition. In that case, they issue a tax resolution to us, and then we need to pay. Or we get a refund, which is then simply paid to your bank account. And the only two categories of individuals who compulsory file annual tax returns are individual sole entrepreneurs, so individuals who perform business as individuals, not within a corporation, and seamen, so people who are on ships. Only those two categories. Yeah,
of course, very two different categories of people.
very different. Yeah, exactly. So if you are in a position to have a refund of tax because you overpaid tax during the year, you do not need to file anything, because the tax authorities will calculate by themselves, provided that there was proper reporting done throughout the year when you received a certain portion of income. But if, for example, you paid some tax abroad and you would like to credit this tax against your Croatian tax liability, then you again do a certain type of filing to the Croatian tax authorities, and you also submit proof that you paid a certain amount of tax abroad, and then this tax is credited by the tax authorities against your Croatian tax liability. So it's not totally simple, but it's much simpler than in the US, for example.
Mm-hmm. Could I maybe ask one more question before we go on to double taxation? How common is it to get a tax return in Croatia?
Oh, it's very common. It's very common, because it may happen, since we have these two tax brackets, it may happen that, for example, you have been employed for the last 6 months of a year, and you didn't work in the first 6 months, and then you're entitled to use your annual tax brackets, but you were taxed on the monthly tax brackets. So you have a lot of tax which you basically overpaid, because when you calculate all 12 months and you're entitled to that, actually the tax authorities do it for you. They will simply pay you the overpaid tax back.
And do they just send that directly to your bank account?
Yes.
Wow. So they have that information to send it back to your bank account.
Yeah.
That's great.
I would say there's also the other reason, Hrvoje, Croatians are generally very good entrepreneurs, so there's plenty of them out there.
That's true, yeah.
So I'd like to kind of go on to our next subject, like our next topic, where, a lot of Croatians, me and Johnny are fortunate enough that, Croatia and Canada have had a double tax treaty since 1997. So good on the Croatian Canadian community. But a lot of other Croatians that live in Australia and the United States, you know what I mean? They still have this problem of double tax. So what are some of the things that double tax treaties do for dual citizens? And what can dual citizens that come from a country that does not have a double tax treaty do to avoid paying double tax in both countries?
Mm-hmm. Okay, this is a very, very interesting topic, but it's a bit complex. So if you allow me, I would like to provide some general information so that our audience understands the principle of double taxation.
Sure.
And then I think that some questions will actually already be answered through that. Okay.
Okay.
First, I would like to say that Croatia has a fairly good network of double tax treaties. So we have tax treaties with now, I think, 66, 67 countries in the world, including some exotic countries like Mauritius, for example, which is a bit strange.
Write that one down, actually. That's good.
Yeah. That's true. We do not have a double tax treaty with Australia or the US. I don't know why Australia, but I do not know that with the US there have been many attempts and initiatives. The problem is actually on the side of the US, because they have so far not been so interested. They would like to see something that in business we call business case. So they would like to see a certain volume of transactions between the United States and Croatia in order to even enter negotiations to have a double tax treaty. And I have information that there is a certain gentleman in the US. I'm not sure if it's congressman or senator, but in any case, this guy believes that any double tax treaty is against the US interest. So he very much opposes any new double tax treaties, not only with Croatia, with other countries as well. Out of the European Union countries, Croatia only does not have a double tax treaty with Cyprus. I also don't know why Cyprus, but there is a double tax treaty in place with all other European Union countries. Okay. The principle of avoidance of double taxation, when you have a double tax treaty in place, everything is much easier, of course. But even if you don't, like with the US or Australia, it does not automatically mean that you as a Croatian tax resident would pay tax in two places at the same time. Actually, double taxation is defined as paying tax on one individual's very same income in two different countries. Okay? So in practice, it very rarely occurs. Very rarely. Why is that? I'm talking about Croatian tax residents now only, because I'm talking from the Croatian tax perspective. This is because Croatia applies so-called unilateral measures for avoidance of double taxation. And these are basically measures where the Croatian tax authorities, if you are able as a Croatian tax resident to prove that you paid certain tax in the US. Let's assume that you received a dividend from a company in the US, and you have reported to the Croatian tax authorities. And then you say, I paid in the US, they withheld 20% tax, for example. Yeah? And what the Croatian tax authorities would do, they would say, okay, you would be in Croatia liable. Let's assume this is me, because I live in Zagreb, and I will take myself as an example, because I pay effective tax rate of 14.16% tax on dividend from abroad. So the Croatian tax authorities would say on every $1,000, you would pay $141.60 of tax in Croatia. But since you already paid 200 in the US, which were withheld by the payer, we will simply credit the US tax against the Croatian tax liability. And I will not pay any further tax. So effectively, I only paid tax in the US. I reported in Croatia, and my tax liability in Croatia is deemed to be covered by the US tax. Okay. So if, for example, I only paid 10% tax in the US, then I will need to pay the difference in Croatia. But again, I will not pay tax in two countries at the same time. Okay. So in general, people do not need to worry about the situation where they would really be double taxed, which means that they would pay tax on the same income in two different countries, unless they are, for any reason, unable to prove that they really paid tax in the other country, or that they cannot prove how much tax they paid in the other country. Okay, this is in my practice the only situation where it may happen that you would actually be paying taxes in two countries, but generally it does not happen. Okay, even if there is no double tax treaty. When there is a double tax treaty, then the situation is, it's not really simpler. It's maybe even a bit more complex, but it's better for the taxpayer because the double tax treaty is a kind of an agreement of a contract between two contracting states where they define that a certain individual or a corporation is a resident of either of those two states. So for a purpose of application of a double tax treaty, you will be defined as a tax resident of one of those two states only, not both of them. Even though based on domestic regulations of both states, you might be seen as a tax resident of both of them, okay? But in order to make it possible to apply the treaty, there is always, usually that's Article 4 in those treaties, which defines the residency based on certain criteria. And then you define, okay, based on the treaty, I'm a Croatian tax resident. I receive income from, let's say, Germany, okay? And then I made up, there is a German-Croatian tax treaty. I have no idea because I haven't checked what the rules are. But typically, the treaty would say, if Hrvoje, as a Croatian tax resident, received a dividend from a German corporation, okay, and the German corporation pays this dividend to Hrvoje, then Germany is entitled to tax this particular income, dividend, at, let's say, 10% tax, for example. So basically, the countries are agreeing on how much tax which country will take. Croatia, as my country of residence, is theoretically entitled to tax my worldwide income because I'm a Croatian tax resident, including this dividend from Germany. However, due to the treaty, Germany is also entitled to tax it, but there will be no double taxation as there is another article in the double tax treaty, in all of them, and it provides for a method of avoidance of double taxation. And then basically you have two methods. The exemption method, these are two main methods. Exemption, which means my country would treat my German income as if there was none income, so they would just ignore it. Or credit method, which means, okay, you have paid 10% tax in Germany, you need to pay 14.16 in Croatia, you will only pay the difference because we will treat German tax as if it was actually Croatian tax. Okay, so it's not, for me as an individual, I will actually always pay a certain amount of tax, but the countries, Germany and Croatia in this particular case, have agreed on how much tax each of them will take. Okay, so that's the point of the double tax treaty. As you saw in Croatia, Croatia suffers for not having a double tax treaty with the US because unilaterally they say, okay, you pay tax in the US, we will not tax you at all. Which is not the case when you have a double tax treaty, because then for every type of income, it is always stipulated which country needs to do what and who is entitled to what amount of tax. Okay, so this is generally about the principle.
Well, guys, so that's the webinar. We explained everything. You don't need to pay taxes. No. Would you guys like to get into maybe some specific questions? So, or do you think that there's something else that we need to clarify, John?
I think it's good how I said. I mean, clearly we're talking from a Croatian tax perspective. So for Croatian tax residents, so most of the people probably in the webinar are not Croatian tax residents. They're probably US or Canadian or Australian or somewhere else, right? And so, the double tax treaty, in effect, it makes it clear what happens from a Croatian tax perspective. And I know that there's questions out there, people who would like to move to Croatia and permanently be resident there. And maybe, one of the things that we could talk about is what happens when you do that, because I'll just bring myself up for a second. You mentioned Canadian double tax treaty, which came out in 1997. I just by chance moved in 1997 to Croatia, right? So haven't filed a tax return since in Canada anyways, right? But, I went into non-residency immediately, right? So I think the US citizens perhaps may have as a difficult or more complicated situation than anybody, because if you have a U.S. passport, you're always going to be liable for U.S. tax, and that's maybe the unfortunate side of it. But that's how unbending they are in terms of this, especially when you don't have a double tax treaty, right? So this is where it gets a little bit tricky. And Hrvoje, I guess one of the things I would ask when or consider here is, if somebody's moving, depending on the country, what are the things that they may want to think about before they move? People have assets here already. I know people have houses, vacation houses or whatsoever, and then maybe they like to move permanently. Maybe they want to receive their pension here, and pension's a whole other topic for sure, which you touched on for a second. But even before we get to that, if somebody's moving, what questions should they be asking, or who should they be consulting with to make sure that they have all the information before they make decisions that they can't go back on?
Yes, thank you, John, for mentioning this U.S. citizenship. This is a very important point, because the U.S. are one of the rare countries which tax people based on citizenship and not residence. According to my best knowledge, all the European Union in general, all the European countries tax people based on their residence and not citizenship. So it's irrelevant from the Croatian point of view in the majority of cases what citizenship you are holding, whether you're a Croatian citizen and also the US and Canadian, like Mate, for example. From the Croatian point of view, for tax purposes, it matters whether you are a Croatian tax resident or you're not. If you are not a Croatian tax resident, but you have Croatian sourced income, for example, you have a house here and you rent it out and you have rental income, which is taxable, then this is Croatian sourced income, and Croatia is entitled to tax it based on a domestic laws, but also based on, I think, even all 66 or 67 double tax treaties. Croatia would be entitled to tax this type of income. But if you are a Croatian tax resident like John and myself.
Hrvoje, just one second, sorry, before you continue. What is a condition to be a Croatian tax resident? How do you become a tax resident?
Mm-hmm. Yeah, I will just explain that. So if you are a Croatian tax resident, you pay tax in Croatia on your worldwide income. We say it in practice, but you do not really pay Croatian tax. You actually report all the income you earned anywhere in the world to the Croatian tax authorities. And then whether you would pay Croatian tax on that income depends on whether this type of income is even taxable in Croatia per our laws. And if so, whether you paid also income like in my example with the dividend. Now, about the residence, every country has its own rules or set of rules to define a certain individual as a resident or a corporation as a resident. In Croatia, these rules have also developed over time, and today we have a pretty good situation. So normally you would be a Croatian tax resident, you would be deemed to be a Croatian tax resident if you either permanently live in Croatia, which means that you have a permanent home. Sometimes it's sufficient that you have a home at your disposal, even if it's rented. It doesn't need to be your ownership. Or you have we call it habitual abode in Croatia. For example, you come to Croatia for 4 months or 6 months every year, which means you have a habitual abode in Croatia. These are somewhat complex rules, and I will not bother you with details, but generally speaking, if you have a home available in Croatia, you might in the first step consider yourself a Croatian tax resident. If at the same time you have a permanent home elsewhere, then in a country where we apply a double tax treaty, then the rules from this mentioned Article 4 will be applied, and there are criteria, and you go one by one. Okay, so if you have permanent home in both countries, then you cannot determine whose tax resident you are. Then you go to the next criterion and the next, and so on. Usually we come to the criterion called center of vital interest. and this central or vital interest is there where either your family lives, meaning your immediate family, your spouse, your kids, if they're not already grown-ups, or where your strong economic ties are. So we introduced this criterion from the OECD model convention based on which all Croatian double tax treaties are made to the domestic legislation. And the situation now, since last year, is much better for US citizens because there was a problem. If a US citizen had a house in Croatia and they would spend like 6 months a year here, based on Croatian legislation at that time, they would be deemed to be Croatian residents. And that could complicate their tax situation. Today, it's better because if you can say, I do have a home in Croatia, which is always available to me. I spend there 4 months, 5 months, maybe even 6 months. But the center of my vital interest is still in the US because the majority of my assets in the US, my income comes from the US. My children live in the US. Then you can say you're not a Croatian tax resident and you do not need to report to the Croatian tax authorities your worldwide income, including the US income. You only need to report and eventually pay tax on your Croatian sourced income, if any.
Mm-hmm.
Okay, so this is about possible moving to Croatia.
So does this include people that are like digital nomads? Like one of our questions that came in was from a girl that came from Canada that lives here partially. You know, she probably has a habitual abode in Croatia, but would she be liable to pay taxes? Would this include her as a digital nomad?
This is a bit complex and we would need to go into more details to be able to explain this. So I would encourage this lady to seek for tax advice, as I would encourage everybody who has any business in Croatia or has any income which might be subject to Croatian tax, because as John mentioned in the very beginning, every situation is different. And we're today talking about some general situations and we can provide general comments. But in this particular case, there are different tests that need to be performed. First of all, we would need to determine whether the lady is or is not a Croatian tax resident. If not, most probably not, then she might be liable to pay certain tax in Croatia, but this again depends on the type of her income. If she is an employee of a US corporation, for example, and she works in Croatia and she receives income while physically being in Croatia, she might be liable to Croatian tax. If this was the same case with Canada, for example, where we have a double tax treaty, then certain different rules would apply. If I remember correctly from the Article 15, this is employment income, then we would need to do, again, some tests, whether her salary is charged to a Croatian entity, which here is not the case. And then in that case, most probably she would not pay any Croatian tax on that type of income. But I would, if you don't mind, I would stop there because there are many details which need to be taken into account in that kind of situation. But generally speaking, we may say, if you are not a Croatian tax resident, based on those criteria that I explained a bit earlier, then in the majority of situations, as a so-called digital nomad, you would most probably not enter into the position to be liable to pay Croatian tax. Even though whenever you buy something, you're actually paying Croatian tax in the form of value-added tax. But this is not a direct tax. Okay? Yeah.
You know, the other thought here, and Mate, we discussed this a bit, is that, you know, digital nomads, which could become very frequent, considering we've come out of COVID and everybody's remotely working. So people, you know, could be remotely working from anywhere in the world, and Croatia could be one of the nicest places you could come to go do that. And you may have that coming up. So anybody thinking about that, as Hrvoje said, consult, okay? Because it's about the details, the devil's in the details here. But the other side, there could be people coming to live permanently to retire, you know.
Exactly.
And I know of many cases of Canadians, Americans, Australians who've worked their whole life in another country. And now, and Germany as well, and other parts of Europe, you know, and they now say, I'm going to retire. I want to live in Croatia. I built a house there, and I don't ever want to have anything to do with that other country again, whether it's, you know, Canada or whatever. And they move and they come, and that's it. They settle down here, and they are entitled to receive a pension, and they receive this pension from another country. And so, Hrvoje, you know, to make a really simple case, you know, a scenario, somebody comes from Canada and they're receiving a pension income, and that's all they receive is a pension income. What do they got to worry about in Croatia?
Okay, that's a very good question, and that's a good example as well. Prior to answering, I will just tell you something about the former situation, which made Croatia extremely attractive for people like these that you mentioned, John, because I had a number of cases where, for example, Swedish wealthy people or the UK people who got retired and then they received their pension income, but they also had some dividends or capital gains. They moved to Croatia and became on purpose Croatian tax residents, and they wanted to cut all the ties to their home countries, because in Croatia they were literally paying no tax, because at that point in time Croatia didn't tax dividends, Croatia didn't tax capital gains, and Croatia didn't tax pensions which were earned abroad. Okay, and at that time Croatia was negotiating the treaty with Switzerland, and you know that there is a lot of diaspora in Switzerland. Many Croatians live there, and then when they earn their pensions, they come to live to Croatia. And the Swiss authorities were reluctant to accept the usual clause in the double tax treaties which Croatia had, which is the country of residence, in this case Croatia, is the only country entitled to tax pension income of those people who came to live in Croatia. And Switzerland was hesitant because they said, okay, but then this income will not be taxed anywhere because we are not allowed to tax it, and you in Croatia are not taxing it. So the point of the double tax treaty is not to tax the same income in two countries, but also not to avoid tax, not to have a situation where you do not pay tax anywhere. The Croatian tax authorities insisted on having the clause, and the Swiss finally accepted it. But a few years after that, Croatia changed the principle. The double tax treaty are still the same, but Croatia introduced taxation of pensions, which are coming also from abroad, because Croatian pensions have always been taxed. And the logic is, when you are paying, as we said earlier, when you're paying pension contributions from your gross income, those contributions are a deductible item. So they decrease your taxable base. Okay. So you're basically, as an employee today, you're paying less tax. Tomorrow, once you're retired, you will be receiving pension income, which is basically comparable to salary, to employment income. And for that reason, that pension is it's taxable in Croatia. So today, both pensions received from Croatian funds and those received from foreign funds are taxable in Croatia if the particular person is a Croatian tax resident. Okay. Germany had a different idea because Croatia applied the former Yugoslav double tax treaty with Germany for a long time. And then Germans initiated the new tax treaty and they changed the rule, and the Croatian side had to accept. So Germany is one of the rare countries who implemented in the double tax treaty that they are entitled still to tax German pensions earned by former German employees who moved to live in Croatia and became Croatian tax residents. Okay, so as a principle, if you move from another state to Croatia, you would normally be paying tax in Croatia. But if at the same time you're paying tax in the other country, like Germany, then this German tax will be credited against the Croatian tax liability. So again, you will be paying just one tax, basically. You would at least be feeling that you're paying one tax, because if you're, okay, we're all patriots and we would like to pay tax in Croatia rather than in Germany. But at the end of the day, you don't care. You paid tax and you're not taxed in two different countries. Okay. It's important to note that Croatia has certain incentives for retired people. And the rule is as follows. Every resident taxpayer is entitled to a non-taxable monthly amount of 4,000 kuna, which is a little bit more than, I think, 500 euros, right? Something like that. 530 euros. This amount can normally be increased if you have dependent family members. If you're supporting one child or two children or your spouse or more family members, then there are certain factors which increase your non-taxable amount on a monthly basis. And this is multiplied by 12 to have the annual amount. And this rule of 4,000 kuna of non-taxable amount per month applies also to retired people. But they have another incentive. When their total income, pension income, is calculated and the deemed Croatian income is computed at the tax rates of 24 and 36, you get a certain amount, and then it's split in half. 50% of that tax is not applied. So this is the incentive for people who have retired and they came to live in Croatia. Actually, it's applicable also for us already living in Croatia, but it's a very nice thing. So actually, you may say that retired people are paying 50% less tax than people who are employed, generally speaking.
Okay. I think that clears up a lot of things about taxation in Croatia. But I have one specific thing that I want to ask is that in many other countries like the United States, Canada, we're kind of going away a little bit, but with Canada, the United States, and so on, you have a property tax. Could you maybe explain if there's any sort of property tax in Croatia? It could be a quick answer or something like that. And also, if you do inherit property in Croatia, so either from a family member or if it's in somebody's will, is there any sort of taxes that you need to pay on that property, like a capital gains tax?
In Croatia is attractive also from that perspective, because property taxes are present in Croatia, but they're very insignificant. For example, you have property taxes on, let's say, summer cottages, for example, or summer apartments. If you have like me, I have a holiday apartment at the coast, and I will tell you, I am paying a little bit more than 100 euro per annum. So this is really insignificant. Okay.
Yeah.
Then you have property tax on personal vehicles. Again, very low amount, maybe 150 euros per annum. Depends on some criteria, square meters, the zoning for cars, the value, etc. But it's very insignificant for vessels as well. And I think that's all. We have a kind of communal charges for apartments or houses we live in. I'm living in a flat of in an apartment of around 120 square meters, and I'm paying these communal charges, which you might treat as a tax, as property tax, of roughly 100 and maybe 50 kuna per month, which is 20 euros. So really insignificant amounts. So from that perspective, you may say that even though these property taxes do exist, they are very cheap. And your other question was about inheritance. Also from the inheritance perspective, Croatia is very attractive because first of all, the law says if you inherit something in Croatia, then you are liable to tax. The tax is only 5% of the value of the inheritance, 5%. And there is a wide group of exemptions. For example, if my wife or my kids or my granddaughters, which I don't yet have, but in the future, inherit something after my death, they will be paying no tax whatsoever because they will be tax exempt. And also, if you inherit a house, normally a transfer of ownership of real estate is typically taxed at 3% of the market value. But if you paid this tax, then it excludes inheritance tax. So those two tax types exclude each other. Okay. So again, if there is anything inherited in Croatia, it might be, though, a problem of defining what it means in Croatia. I'm a Croatian citizen in this case. Residence is not as important for this purpose. And I inherit a certain large sum of money in Croatia. And this is my far relative. It's not, these are not my parents, for example. Then I will be paying 5% tax. But what if I inherited the same amount of money in Austria, for example? That's not clear. I'm in Croatia, but the asset is in Austria. It would be my interpretation that then I would not be liable to any Croatian inheritance tax.
Okay. But there might be some Austrian tax, of course, right? So,
might be, yeah.
Mm-hmm.
Yes.
I just want to bring one thing. Like there's a lot of people who are pensioners, and a lot of the pensions, you know, they send checks, and checks aren't necessarily cashable anymore here in Croatia. It's very hard. So I just wanted to put that out there for anybody watching or listening. You know, you probably already have it if you're in the States or Canada, direct deposit into your bank accounts, and a really effective method is just to keep your Canadian or US bank account, keep the debit card, and have the money deposit directly into your account, and then withdraw it using your debit card, right? Because otherwise you're going to get into some pretty tricky situations, and maybe even stale dated checks and this sort of stuff that could have an impact on you being able to utilize that money and receive it in time or in a prompt fashion, right? So there's some questions about that, but cash checks were cashable up until about a year ago. And I think there was some legislation through the EU, European banks and the Croatian National Bank. And so that, I've come across some situations where people are not able to cash checks anymore, right? And it does create a difficulty. And if they don't have a bank account in the jurisdiction that's issuing the pension, then they're in a bit of trouble, right? And it's hard to get a bank account unless you're traveling back, right? So.
And the great thing about checks, even like if you have a Canadian or American bank account, is that even if you receive a check, you're able to take a picture of that check with their mobile app, and then you're able to deposit wherever you are. So if you're receiving your checks,
that's the beauty of technology. Yeah, that's the great thing, right? But you have to have that account there, right? And
exactly.
I don't see anything coming up in the near future where Croatia is going to make it easier in that respect, right? But but it's just a thought there, right? Unless you have a direct deposit coming in. And Hrvoje, I don't know if you've seen this where, are people receiving pensions from that country directly into their account in Croatia? That's the other question, right?
That's quite common. I know a lot of people who receive, for example, people who have retired in Germany and they came to live in Croatia permanently. So they either kept their German bank accounts because they're allowed to, based on Croatian legislation. You may have a bank account wherever you want. And they withdraw sums that they need to Croatian bank accounts, or they, from time to time, go to Germany to visit friends or family, and then they cash it in. They take money in the bank.
It just depends on where you are. I'm just bringing this up because if you are using a debit card, you're going to be subject to exchange rates and this sort of thing as well. So things to keep in mind, right? And get informed about how you can be at least optimizing, your use of that.
Correct. This is not just one sentence more about those pensions. It's not a legal or a tax question. It's more about whether your fund in Canada, Germany, the US is willing to send money to your Croatian bank account. So I think it's more like a relationship between yourself and your fund in that country.
They I know in Canada that they strictly refuse to do that right now. They don't send money abroad. Definitely not.
Just one more question in terms of inheriting in Croatia. one of the people actually commented on Facebook was, what about children who do not have Croatian citizenship inheriting property in Croatia? Are they also, do they need to pay that tax inheriting? Or
well, yes, this is generally I would say yes, but this is the problem of this definition of what it means to inherit something in Croatia. If this is property, I would always say the property is based in Croatia, and it was inherited irrespective of by whom, by a Croatian citizen or a foreign citizen. It would be liable. The inheritance would be liable to Croatian tax. However, this exemption would apply because this is the child of the deceased person, and it doesn't matter whether the child has the Croatian citizenship. What matters is this is the child. Yeah?
Okay, perfect. Do you guys have anything else you would like to add towards the end of this? We went for a full hour actually. Wow, that's we really went through a lot of things, and do you guys have anything else to add towards the end?
Well, I would say that Croatia is or has become a more and more attractive destination for investments, and the legal certainty and the whole situation economically and legally has been improving on a daily basis, I could even say. There are sometimes difficulties, but if you seek for a proper attorney and a tax advisor and is structured properly, then the chance that you would have problems is quite remote. Okay, so it's what I'm trying to say. I'm not advertising PwC or anybody else. I'm just saying seek for proper advice always, and this is very important. I'm telling this because in many cases we as PwC had to act as a kind of a fire brigade, because we were extinguishing fire afterwards instead of helping people plan and avoid problems. And it's very expensive not to engage advisors, even professional quality bookkeepers, because you think I'm saving some money today, but you will be paying a lot more in the future. So this is like any other country. Better to structure, to be smart at the very beginning. There are ways to legally structure and avoid overpaying taxes. And this is something that is worth doing. Okay, so I'm inviting all of you, if you want to invest in Croatia, do so, don't be afraid, but with proper advice.
Of course.
Well, Mata, this is not something unfamiliar to what we've said many times, right? And we say it even in our office, you know, consult, because if you're going to make a mistake, you don't want to do it alone, okay? You want to have somebody on your side, and if you do, you most likely won't be making a mistake. And I just wanted to emphasize the investment part. You know, up until a couple of years ago when the tax law changed, and it's still not bad, capital gains. So, if you're investing into a company in Croatia, and sometimes you could be buying land, but you buy it by a company, which is one structured vehicle you could use to do that. Capital gains were not taxable at all. They were free, tax-free. Now they are taxed, but if you hold on to something for 2 years, it's again tax-free. So, if you bought something today and you sold it in 2 years through a company, you don't pay tax on the gain, which is fantastic. And on the dividend side, dividends are taxed at only 12%. 12% is a pretty nice rate. It's a pretty fair rate for dividends. When you think about some of the other jurisdictions out there and the rates they charge. So, just some food for thought, things to think about. In addition to what Hrvoje said, it's a decent investment climate, and there's other incentives there as well. If depending on whether you're going into, a complete new manufacturing situation and building a plant, there's plenty of incentives, tax holidays, and this sort of stuff that's out there. You just gotta, look at the scenario and look at the details, and I think it could be quite attractive.
And John, thank you for reminding me. I also wanted to mention that whenever you intend to invest in a country, it's always good to check the corporate income tax rates, but you need to be cautious because sometimes they might be misleading, because you typically take a look at so-called nominal tax rates, but effective tax rates are something different, or maybe quite different because, for example, a country may say we only apply 10% corporate income tax, but then when you take a look at what cannot be tax deducted, then you come to a conclusion that your effective tax rate is actually much higher, or vice versa. In Malta, which is seen as a tax-friendly country, I think that their nominal corporate income tax rate is close to 50%, which is like crazy. You would say I would never invest in such a country, but they have such a complex group of tax incentives that they come to a effective tax rate of only 5% or 6%, and this is really attractive.
I think that's it.
Yeah. It's important to compare right things, right?
It also depends, and as you said, it depends on the industry you're investing in. You could be investing in agriculture, you could be investing in hotels. It's two different things. Yes. And there's a different set of incentives for this, right? So
exactly.
That's why you have to consult professionals and get the right advice and then make your decision, right? And see how you're going to go on. And it'll probably be a lot better than just the headline information you see through some of the tax laws.
Exactly. Well, I want to thank John and Hrvoje once again for coming on and talking about taxes. And I think it cleared up a lot of questions for people, especially in the diaspora. And, really thank you, John, for supporting Crow Diaspora. You've been doing a lot for us. And Hrvoje, hopefully when I come back to Croatia, we can go out for a drink or something.
We'll be happy to.
Matt, I hope we have you back for the summit.
Well, yeah, of course. I need to, hopefully by the end of June. That's what I'm praying for. By the end of June, I'll be back in Croatia. So, yeah.
Have a Crow Diaspora Summit in October, hopefully.
Exactly. That's what I'm hoping for. Yeah. You can only hope and pray. Yeah. Anyways, guys, enjoy your soccer match, John, and enjoy the rest of your day, Hrvoje.
Thank you very much.
Thank you, Hrvoje. Thanks, everybody. Bye.
Bye.